There has never been a more exciting time to talk about building long-term wealth. With more people than ever investing their money in both traditional and modern assets, the big question arises: should you invest in crypto or stick with stocks? If your goal is to build wealth that lasts for decades, this decision can shape your financial future. Let us break down the strengths, weaknesses, risks, and rewards of both so you can make a smart and informed choice. Number 1. Understanding the core differences. To start, it is important to understand what each investment really represents. When you buy stocks, you are buying ownership in a real company. That means you own a piece of a business that sells goods or services, earns revenue, and hopefully grows in value. You can earn money from stocks in two ways: when the stock price goes up and when the company pays dividends. On the other hand, when you invest in cryptocurrency, you are buying a digital asset that operates on decentralized blockchain technology. You are not investing in a business with cash flow, employees, and management. You are often investing in technology or belief in the future value of a digital system. This fundamental difference is why these two assets behave so differently. Stocks are backed by companies with earnings, while crypto is often driven by speculation, supply and demand, and user adoption. Number 2. Volatility, friend or foe. Here is where things get intense. Cryptocurrencies are known for extreme price swings. It is not unusual for a crypto coin to jump or crash by 10 to 20% in a single day. For long-term investors, this level of volatility can be both an opportunity and a risk. If you buy during a low point and the coin skyrockets, you can see huge gains. But if you panic during a crash and sell too early, you lock in major losses. Stocks, while still volatile, tend to have more stable and predictable patterns. Major stock indexes like the S&P 500 might fluctuate 1 to 2% on an average day. Over time, these smaller movements create steady growth. If your goal is long-term wealth with less stress, stocks provide a smoother ride. But if you are comfortable with high risk and high reward, crypto may offer a faster road. Just remember, the fall can be as quick as the rise. Number 3. Historical performance tells a story. Let us talk about facts. Stocks have a track record that goes back over 100 years. The average annual return of the stock market, especially the S&P 500, is around 8 to 10% after adjusting for inflation. This includes periods of recession, war, and global crisis. Despite all of that, the stock market has consistently rewarded patient investors. Many people have retired comfortably by investing in stocks through retirement accounts or long-term portfolios. Now look at crypto. Bitcoin, for example, has delivered some of the highest returns ever seen, growing from a few cents to tens of thousands of dollars. Some investors have become millionaires overnight. But crypto has also seen devastating crashes, like the 2018 bear market or the 2022 meltdown that wiped out billions. So while crypto has potential for explosive gains, its short history makes it harder to predict long-term success with certainty. If you value reliability and proven growth, stocks offer a more consistent foundation. Number 4. Regulation and security matter. Another key factor is government regulation and security. Stock markets are heavily regulated. Companies must report earnings, follow laws, and meet strict requirements. If fraud occurs, there are legal systems in place to protect investors. While not perfect, these rules create trust and accountability. Crypto, however, operates in a mostly unregulated space. While some countries are beginning to introduce laws, many cryptocurrencies exist in legal gray areas. This lack of regulation opens the door for scams, hacks, and shady projects. Countless people have lost money due to wallet breaches, pump and dump schemes, and rug pulls. If you plan to hold assets long-term, you need assurance that your investment is secure. Stocks offer more transparency and safety. Crypto requires technical knowledge and careful research to avoid dangerous pitfalls. Number 5. Diversification may be the smartest move. Here is a golden rule in investing: never put all your eggs in one basket. While the debate between crypto and stocks continues, the truth is you do not have to choose just one. In fact, a diversified portfolio may be the best path to long-term wealth. You can use stocks as your foundation, reliable, proven, and income-generating, while using a small percentage of your portfolio to explore crypto. This way, you get the best of both worlds. You benefit from the long-term growth of established companies and still have a chance to capture gains from emerging digital assets. Many financial experts suggest limiting crypto to around 5 to 10% of your total investments. That way, if crypto performs well, it boosts your wealth. If it crashes, it does not destroy your entire portfolio. Diversification balances growth with protection and lets you sleep better at night. Let us pause for a second and ask, what kind of investor are you? If you are someone who values security, long-term growth, and predictable returns, then stocks may be your go-to. If you are more aggressive, tech-savvy, and can stomach losses for the chance of higher gains. Crypto might suit your style. It is not about which asset is better in general. It is about which one fits your goals, risk tolerance, and timeline. Also, consider the impact of compound interest. Stocks have the power of reinvested dividends and compounding over decades. If you invest consistently and reinvest your earnings, your portfolio can double, triple, and even 10x over time. Crypto does not offer dividends or traditional compounding. Your gains rely solely on price increases. That means if the price does not rise, you earn nothing. With stocks, even if prices stay flat, dividends can still pay you income. That steady stream of reinvested earnings helps build real wealth, quietly and powerfully. It is also important to look at the tax treatment. Stocks held for over a year qualify for long-term capital gains tax, which is lower than regular income tax in most places. Retirement accounts can also shield stock investments from taxes altogether until withdrawal. Crypto, on the other hand, is taxed differently depending on the country. In many cases, every crypto trade is a taxable event. You could owe taxes even if you are simply swapping one coin for another. This creates complexity and surprise bills if you are not careful. For long-term investors, this tax uncertainty can be a disadvantage. Stocks offer a clearer and more stable tax environment. Now here is something to consider. What if both markets evolve? Crypto is still young. As regulations improve, security gets better, and adoption increases, it may become more stable and valuable. Some experts believe blockchain technology will revolutionize finance, supply chains, and digital identity. If that happens, crypto could play a major role in the economy of the future. Meanwhile, stocks are adapting too. Many traditional companies are integrating blockchain, AI, and other advanced technologies. The two worlds may eventually blend. The future of wealth may not be about choosing one or the other, but mastering both. One final word of caution. Hype is not strategy. Whether you are drawn to the excitement of crypto or the familiarity of stocks, never invest based on emotion or peer pressure. Educate yourself, understand the risks, set clear goals, and always have a plan. Long-term wealth is not built overnight. It is built through patience, discipline, and smart decision-making. So, what is better for long-term wealth, crypto or stocks? The answer depends on your risk tolerance, financial goals, and knowledge. Stocks offer proven growth, stability, and income. Crypto offers innovation, speed, and potential for explosive gains. A balanced mix of both may be your smartest path forward. Keep learning, stay disciplined, and let your money work for you. If you found value in this deep dive, hit that like button and drop a comment below. Are you more into crypto or stocks, and why? Let us hear your thoughts. And make sure to subscribe for more powerful financial insights. Next up, how to retire early with smart financial planning. You do not want to miss that one.